Our next guest has called for a while that it's time to pause on the world's largest cryptocurrency by market cap. Let's bring in Peter Tchir, head of macro strategy at Academy Securities. And Peter, you've been saying this for a while now. What is your rationale?
So one, we started this year positive on crypto with all the adoption that we are seeing. And a big change for us has really been the awareness that politicians are taking of what Bitcoin and crypto means, right? There's obviously tax consequences. So you saw the IRS today called to be able to regulate it. So I think politicians are worried about the tax breaks that are having. But even more important from a geopolitical standpoint, things like sanctions aren't very effective when you can get around sanctions using crypto. And finally, this spate of hacks where crypto is really the currency of choice for ransomware has spurred further interest. So I think you're going to see a global kind of government crackdown or regulation on it, and that's going to drag this price down for now.
And what's really interesting is that every time we see sort of a sell-off or gains in Bitcoin, we see the opposite happening for some of those meme stocks like AMC. This GTV chart on the Bloomberg showing AMC's strength also tends to sort of coincide with Bitcoin's weakness. Does this tell you something about where the strength and weakness for these two assets are coming from when it comes to perhaps retail investors being the driving force?
Yeah, I think it's not just retail investors, but it's the retail investors who are very focused on options trading, fairly illiquid assets. So they take those options, they try and create some momentum. So I think they're shifting their money away from, Bitcoin. And yes, there's the hodlers or the people who hold Bitcoin, but they're still at the margin, right? It's that trading that drives it, the next flow. And I really do think people are now concerned that if we break 30, which I think happens, we could see 20,000 or even 15,000 on Bitcoin. So they're taking their energy, their capital elsewhere. That's going to be another problem. And certainly when I look at the conversations I've had with corporations, a month, 2 months ago, everyone was kind of exploring, do they need Bitcoin? You had, certain companies talking about crypto nonstop. It was going up. I think you've seen that pull off. So I think people are looking at this volatility, looking at the concerns from a geopolitical standpoint, from a ransomware standpoint, and saying, we might pause on that. So that latest wave of adoption isn't going to happen, which is yet another reason I think Bitcoin in particular is going to, sell off further.
Yeah, that momentum when it comes to institutional adoption certainly seems to have taken a pause, right, Peter? I want to get your views on inflation because you say it is coming. I'm wondering if you think it is transitory. Take a look at this chart that shows, once again, we're back to this situation where bad news is good news for equities, right, for investors that are used to this flood of easy money. Having said that, that negative correlation between economic surprises and stock performance is starting to ease off a little bit. Is that a sign that investors are slowly coming around to this idea of, talking about normalization?
I think a lot of investors really do think inflation is going to be transitory, and I take the opposite side. I think inflation is actually going to be very persistent. It's going to last for a while. And part of that to me is this push towards sustainability and also some of the friction that we're seeing with China, right? Just today, at the open of this broadcast, we talked about policies that the US is going to take to bring more production onshore. I think a lot of high-tech production we want onshore or at least done with our closer allies. I think you're also going to see the Biden administration focus on pharmaceuticals and anything healthcare, right? If anything we learned from the pandemic is we need to make sure we have those resources either domestic or with our close allies or close neighbors. So I think you're going to see shifts like that. Some of that's going to be inflationary. I think as you see people push towards sustainability and whether it's sustainable products where they can pass those costs on or sustainable processes where they look deeper at supply chains, all those to me are additive in terms of the inflation pressures. It's going to be wage pressure, cost pressure. I think this is going to go on for a number of years. So I think the market is still in this transitory view. I think that's going to be the wrong view.
And of course, as we're talking, we've just heard in the last few minutes or so, the US Senate passing this massive comprehensive bill aimed at elevating US competitiveness against China. You say that especially across areas like commodities, and we're looking at chips in particular as well in semiconductors, that there are still opportunities for the US despite Chinese dominance?
Yeah, I think there's going to be a lot of friction with China. When I'm advising clients, I think the Biden administration does not like tariffs. So just like there's talks about getting rid of tariffs in Europe, I think we'll see tariffs pulled back, which will be a huge opportunity for ag and certain other businesses. But I think the two things we're going to be really focused on in this administration is high-tech 5G. So that's where the frictions can remain with China. And you're also going to see that on that healthcare and pharmaceutical side. So that's, I think, the opportunity to figure out where are those things going to be made in the US or in Mexico or in Canada or maybe even in Europe. How do you take advantage of that? I think you're going to see great global growth. I think you're going to see job growth continue. We had a record number of jobs available today's JOLTS report. I think that continues, right? So we're going to see this real big growth. And a lot of it's going to be as trade relationships change. And though catching that change is going to be important. So I do think we're going to see tariffs pull back and kind of run-of-the-mill type things with China, because none of the economists advising Biden like tariffs. But you are going to see this ongoing, or perpetuation of that fight over that high tech and healthcare and medical.